Okay, welcome. My name is Kyle, and this is going to be an e-tutorial on how to solve problem E11-16 from the Pearson workbook. So we have Brad Jackson, who works for Bob's Burgers Takeout for straight-time earnings of $15.25 per hour, and then time and a half hours are given in excess of 35 hours per week. So 35 hours is the threshold. If Brad works more than 35 hours, whatever he works beyond 35 hours is paid at an overtime rate. And then Jackson's payroll deductions include income tax of 21%, CPP of 4.95% on earnings. Okay, and we need to account for the basic exemption of $3,500, EI of 1.66%, and additionally, he contributes $10 per week to his RRSP. Assume that Jackson worked 40 hours during the week, so actually the 35-hour threshold is coming into play here, and he has not yet reached the CPP or EI maximum earning levels. Okay. So what we need to do is compute Jackson's gross pay and net pay for the week. So that's requirement one. So what I'm going to do here is I'm going to set up just a little template for us, gross pay. So we know gross pay in this case is going to be a combination of two things. One, straight time pay, and two, overtime pay. It's going to be straight time pay for the first 35 hours that Brad has worked. So the first 35 hours multiplied by the hourly wage, which is $15.25. So it's going to be $533.75. So how I got that is, well, $15.25 per hour multiplied by 35 per week is going to be $533.75. But you're sitting there thinking, hey, Kyle, what are you doing? Jackson worked 40 hours during the week. You so far have only accounted for 35 of that. And you're right. Anything that's above the 35 hours per week is calculated at an overtime rate. So the next 5 hours is going to be total overtime. Don't have my spreadsheet formatted properly. It's going to be overtime. And the way that that's going to be calculated is the same rate, $15.25, multiplied by 5 hours, multiplied by 1.5 this time. And that's going to equal something, multiplied by 5, multiplied by 1.5, 114.38. So between these two, we get a total of 40 hours that's worked for Brad, and that's split between 35 hours of straight time and then 5 hours of overtime, because 35 hours was the threshold in which overtime applies. Anything beyond 35 hours, Brad is paid at an overtime rate, and that means it's multiplied by 1.5. Okay, so let me clean this up because this is already very, very messy. So just bear with me here. So now that we have both our straight time rate and our overtime rate, I'm just going to calculate what the total gross pay is. Gross, total gross pay. And I'm going to give myself, an underline, sum these together. So gross pay is $648.13. We're going to see that that is going to be the wage expense for the employer. This is the total cost for the wages for the employer. Of course, the employer is going to pay benefits on top of that. Okay, so then the gross pay we have here, but of course, this is not the take-home pay to the employee. This is not going to be the cash the employee receives, because there's going to be deductions on that. We're just going to give ourselves a title here, deductions, and we'll go through them one by one. It started listing them in the question, and it's really quite messy, so we'll just go through it one by one. Jackson's payroll deductions include income tax of 21%. So, of course, employees have to pay tax on the earnings they make. So what happens here is we take the gross pay and we multiply that by the tax rate. When we're given a tax rate of 21%, so we're going to take, I can do a better job of circling than that. 21%. So we're given a gross pay of $648.13. We're just going to multiply that by the tax rate of 21%. So what I'll do next to this, I'll just put gross pay multiplied by tax rate, and I'll put 648.13 multiplied by 21%, so that you can see this later on if you're wondering where a number is coming from. So the employer withholds this income tax, and they're going to remit it on the employee's behalf to the proper authority. So it's not included in the employee's net pay, but it's the employee's money. They have to pay it. The employer is just withholding it from the employee, and they're going to remit it to the authority on the employee's behalf. Okay, so what's next? There was CPP of 4.95% account for a basic annual exemption. Okay, so they're not paying CPP on their entire wage. Instead, there's an annual exemption of $3,500. So what we need to do is account for this basic annual exemption. So we know here it said basic annual exemption, so it's the annual amount, but we're paid here weekly. So what we need to do is allocate or determine the weekly exemption. And there's 52 weeks in a year, so we're going to divide the annual amount, which is $3,500, into a weekly amount, and that's going to equal something. $67.31. Okay, so to calculate the CPP, what we need to do, CPP deduction, what we need to do is take the gross pay, subtract this weekly exemption, and then multiply that by the rate that we're given of 4.95%. So that's going to be equal to the gross pay, subtract the basic annual exemption, divided by 52, which is 67.31, multiplied by 0.495 or 495%. It's going to be 28.75. So let me just put that in a formula here next. So gross pay, subtract exemption, multiplied by rate. And that was, I'll just do it, 648.13 less, I think it was 67.31. I'll do less 3,500 divided by 52 times 4.5%. So in case you're wondering where the 28.75 came from, the formula is right there. Okay, so let's move forward. What's next is EI of 1.66% of earnings. So this one's going to be a lot easier. EI, employment insurance. That's going to be gross pay multiplied by 1.66%. So gross pay multiplied by 1.66. 1076, and I'll put this here, gross pay multiplied by just rate here, and it was 648.13 multiplied by 1.66%. Then finally, I think this is the last deduction. Brad contributes $10 per week to his RRSP. Okay, so the employer just withdraws it and deposits it on his behalf into his RRSP, and it's $10 per week. So no calculation needed. So that's good. We have our total deductions, I think. Let me see, assume Jackson worked 40 hours. Yeah, I think that was the final one. So I'm just going to now add this together and label it. Total deductions. Okay, so we have our total gross pay, we have our total deductions, so the net pay to the employee is going to be the difference between these two. Net pay is going That'd be the gross pay less the deductions. So $462.51. So just a quick comment about all of these deductions. Whoa, and I didn't want to highlight that. I wanted to do a, there. These are the employee's responsibility. The employee has to pay them. The employer just withholds it and remits it on their behalf. So that's important for us to know as we go through step 2, which I assume is going to be a journal entry for this. Let me just make sure. 2, make a compound journal entry for June 14th. Okay. And we need to include payroll deductions in the employer payroll costs. Okay. So that means that, of course, we know the employer payroll costs are going to be the gross pay, but the employer also has to contribute to the statutory deductions of CPP and EI. So what we see here, these are, of course, all of the employee's responsibilities. The employee has to pay, but for CPP and EI, those are cost shared, which means that the employee has to pay a part of it and the employer has to pay as well. So that's what's meant by the employer payroll costs. What are they paying? What's cost shared between them? Okay, actually, I'll keep that there. So I'm going to give myself a journal entry template. Just bear with me while I get this set up. Okay, and it was June 14th. So the wage expense to the employer is going to be the total gross pay. This is going to be the wages expense to the employer. A lot of students get tripped up on this because they think, well, the employer is really only paying this amount in cash to the employee, $461. Why is their total wages expense $648? Well, because this is what they're paying to the employee. The employee then has to make all of these payments. It's the employee's responsibility to make these payments. So the employer pays $648.13, and then the employee has to pay these items. Yes, the employer withholds it and remits it to where it needs to go, and they do that on behalf of the employee, though. So the employer's wages expense is the total gross pay. But I just mentioned that some of these deductions are cost shared among employee and employer, namely CPP and EI. So let's talk about those quickly. Since it's cost shared, and CPP is cost shared at a rate of 1-to-1, we're going to have to debit a CPP expense to the employer, for the employer. CPP cost shared at a rate of 1-to-1, so it's going to match exactly $28.75. Similarly, there's going to be an EI expense for the employer. An EI is cost shared at a rate of 1.4 times what the employee contributes. So the employee contributes $10.76. The employer contributes 1.4 times that. So $10.76 multiplied by 1.4, $15.06. So the total employer's payroll cost really is these three added together. Yes, the employee's take-home pay is going to be $462.51, but the employer's cost in total is all of the benefits on top of that. They have to pay CPP, they have to pay EI, and of course they're paying the gross pay. Okay, so we only have debits, we only have expenditures right now included within our journal entry. Of course you're going to need credits, so we need to balance this out. So what we need to do is set up payables for these. Usually what happens with payroll, you're paid on a weekly basis, a bi-weekly basis, but you don't make the remittances to the proper government authority, usually on a quarterly basis. So what they do is they set up liabilities for all of these deductions, and then they remit them quarterly. So we're going to need to set up an income tax payable. And the income tax payable is not cost shared between employee and employer. It's just the employee's responsibility. So they're going to have to set up a liability for it. And they're going to remit it to the proper authority on the employee's behalf, usually on a quarterly basis. The same thing with CPP. So they're going to set up a CPP payable. But we know CPP is cost shared between employee and employer. So they're going to have 2875 and 2875. They're going to have to add the two of them together. They're going to remit both at the same time. So equals 2875 plus 2875. Same thing with EI. When they make the remittance to the government, they're going to add together what the employee's paying to what they're paying, and they're going to pay both at the same time. So they're going to have a payable for the two added together. Similarly, for the final one, RRSP, the final deduction, you're going to remit $10 into the employee's RRSP plan. So we're almost done with this problem. What I'm going to do, I'm going to take a quick second here and just add up my debits and credits to demonstrate something. They're not going to balance right now. I'm just going to take a quick second. It won't take very long to add up my debits and credits. I have 691.94 debits, but only 229.46 in credits. So what is going on here? Well, if I were to subtract the debits from the credits, I get a difference of 462.48, and that should match. I'm noticing now I've made a mistake somewhere, so it's going to take me a second to find it. My apologies. That should match what our net pay is. And it looks like I probably just typed something in wrong somewhere. So let me just scan here. Yes, I think I see it. Okay, so income tax, it was 136.11. I set up a payable for 136.14. I typed it in. I should have just done equals this to save that from happening. And that was it. So now I'll just start over explaining this. Now I have the sum of my debits and I have the sum of my credits. And the difference between those, of course, debits don't equal credits. We're not in balance. We're out by 462.51. That is the net pay that we owe to the employee. We owe that money to the employee. So what we do to balance out our journal entry is we have a wages payable of 462.51. If we were paying in cash to the employee, it would be cash. Here it tells us in the question, it doesn't tell us, I guess. I'm assuming that they're going to pay the employee next week, in which case it would be a wages payable. But if it told you they would pay the employee in cash or they paid the employee that day by writing them a check, you would be crediting cash by lowering cash. But here I'm assuming that they're going to be paying that employee next week, so it's a liability. And that brings our debits in balance with our credits. Okay, so let me just erase this to clear anything up and make it a lot better for us. And there we go. So this was problem E1611 from the Pearson workbook. I hope that you found this tutorial useful. My name is Kyle. Have a great day.